Alright, so today I'm just going to go over some of my favorite technical patterns and show you how I would trade them. So starting off, we have the Australian dollar, US dollar, and I'm going to ask for you to focus your attention around this area. So we see that long term we're bearish, so we're looking for some sort of bearish indication or bearish setup to get in. So right here, as you can see, obviously this is more like back testing, so it's all hindsight. So right here, we can see that we have a head and shoulders form. So this is going to be the first pattern we dive into. Now, the reason I'm looking at this head and shoulders and not trying to find a bull flag or something like that is because I know we're long-term bearish. So I'm looking for this to go lower. So I'm going to be looking for bearish patterns. Remember, you want to trade with the trend. So right here, we can mark out this high. And then this is just going to help you helps for you to see it better. I'm just trying to illustrate it by marking out these highs. You wouldn't have to do this. So on the left we have this is a shoulder, on the right is another shoulder, and this is the head. Now if you've never seen the head and shoulders pattern before, I will go ahead and bring it up for you just so you can visualize it and understand really what I'm talking about. So here we have head and shoulders patterns. I like this image a lot from Investopedia. I always like to go to Investopedia. So here we go. So as you guys can see, we have a high on the left, then we take out that high, then we come back down to this support level, and then we create another high, and then we start to sell off. So you guys can read this if you want. It'll really break it down, but I'm just going to keep it simple for this video. So yeah, first thing you want to do is make sure you're trading with the trend. Then you want to see this high form. You want to see it hold. So as you guys can see, previously we were selling off, creating lower lows, lower lows, lower lows, but now we start to rally. We start to bounce a little bit. So then we have a higher low. So okay, we might be reversing here, right? That's what people will think. And then we come up here, and what's above here? What would be above here? If you were trading this and you were short, what would be here? Your buy stop, right? Because this is a relative high. We have a previous high here, previous high here. So what's up here? Buy side liquidity. So what happens when you have major buy side liquidity? That means people can sell. If you have a lot of buyers stepping in, you can have some big order come in and just sell to all those buyers, right? So when we took out these relative equal highs right here, we created liquidity for some big seller to come in and just hammer the sells, right? So that's the whole idea behind the head and shoulders. So then we pulled back, had a pop up here, and then continued lower. So where would be the entry? How do we trade this, right? That'd be the question. So as you guys can see, selling off, selling off. I know I've said that a few times, but just bear with me. We got this pop up, and this here as well. But I wouldn't look to enter until the last shoulder. So this is shoulder one, this is the head, and this is shoulder two. So on shoulder two, we'll be watching it. So something you guys should know is right here, you don't have to do this. This is not crucial for the entry, but this does make it a little better. We sweat below these lows. So you see we have these lower low. We have this previous low right here, but we got a lower low on this one. So on the first shoulder, we had a low, and on the second shoulder, it was a lower low. So that tells you that it is more bearish. We are continuing lower again because we swept these lows. So what I would be looking for is I would be looking for a pop into this fair value gap. All a fair value gap is a gap in price. So as we can see right here, this right here hasn't been traded into yet. And let me explain what I mean by that. So the previous candle, this is the lowest we came, and the next candle, this is the highest we came. So if I connect these two, we get this little gap. You see this gap in price? So price tends to draw back into these gaps, so this is what I'd be looking for the entry. Now, this is in a bearish scenario. Now, let me show you a bullish scenario just to really help you hammer it in. This isn't related to our trade, but so you get it down. So right here, this is the gap for this candle. This is our fair value gap, so we'd expect price to trade back into it. Now, why do I say this fair value gap? Let me explain. So I'm going to take my fib, and I'm going to take this high and this low. So we marked out the high and the low, just the most recent one, right? From the head to the right shoulder. So we have this head and this shoulder. So I'm taking this and I'm marking it out, and I want to look at the 50% level. So now let me go ahead and draw that out so you guys can really see it. I'll make it red so it matches that. Perfect. So now we can delete our fib. So this over this 50% level, that's where I want to get in, because you can't just chase it down here. If you tried getting in down here, you'd be under a lot of pressure while it's running against you because you're chasing it, right? So we want to make sure that we get a pop up and we're selling high, right? You don't want to sell too low. If you sell too low, you might be stopped out. So we're waiting for it to go over that 50% level. As you can see, it does right here. And it's a pop into this imbalance right here. So that's a perfect entry. And personally, well, it depends on your risk tolerance. So you could have your stop right above here, because as you can see, we were selling off and we had this quick breath and then continue to sell off, and it's also above the previous high, but that would be very aggressive. A more conservative stop would be at these highs right here, right on top of the head. So if you were to be extremely aggressive, this would be our entry right here. Maybe not exactly at the high, but right at the red line, because that's where our fib was. So if you were to get in right here with the extremely aggressive aggressive stop, you would have, looking for it to move back to the yellow line, which I will explain in a second here why I chose the yellow line. It would be a 4.5 risk to reward. Now, if you chose the high up here, it'd be about 2 to 1. So it's pretty good risk to reward. I mean, I would take this trade. But let me explain why I'm looking for it to get to the yellow line. So as you guys can see on the weekly chart, we kind of have this draw towards liquidity. So this yellow line here would be your profit target, because you see these lows right here. This is where it is. And I honestly, this is very conservative, because I like to set my profit targets kind of conservative, because I'd be looking for it to sweep this low, because look how bearish we've been, right? We've been trending down, so I'd be looking for a sweep of this low. But just to make sure, I always am conservative with my exits. So that would be the plan here and how I would trade this head and shoulders. And there are lots of examples of head and shoulders. I mean, for Forex, this is one of the most common patterns I see. Like if we scroll down, we'll find it. Look, here's another one. Here's another head and shoulders. This one is a bit more advanced, a bit more difficult to trade. So just for starters, I want you guys to stick to this kind. And then later on, you might be able to switch over to that one. I'm going to end the video there just because I don't want to drag on too long. But if you guys enjoyed this, let me know. If you want to say anything else, just let me know in the comments and I'll get to it.